All right. This is the part 2 of this week's market analysis. We're going to be looking at our key levels, key price points that we're going to be expecting market to react to, and if A happens, this is what we're going to do, right? So we don't try to predict or control the market. We just analyze and react to what the market gives, opportunity the market brings, right? So starting off with the DXY, the dollar index, which basically shows us the strength and weakness of the dollar. We can notice that on the daily time frame, the dollar has been on a massive downtrend, and since for the past 2 months, July, August, September, we've been in this range. We've been caught up in this range, right? So chart pattern wise, we would notice that we're having some sort of a wedge pattern, which is a reversal pattern. Again, we don't try to control the market. If it still decides to continue going down, then we just follow the trend. All right. So from the daily time frame, this is what we're seeing on the broader perspective. But for our day-to-day trading, right, for this week on the 4 hours, this is what I'm looking at personally. Right. So notice that last week started off bearish, right, for the dollar. But again, FOMC came up and just, reversed the direction of the market entirely. All right. So I'm personally looking at this level. This level is currently my crucial point of interest. Once price breaks above here and react and retest to this level, then I'm looking for a bullishness in the dollar. All right. But if price rejects from here, like we are seeing some bearishness right now, you can notice this candle, then we've got no option but to still continue selling down to 96.443. Right? So we watch what the market does and react. So looking up on GBP USD, again with the daily time frame, right? We see our key levels right here. We have a very crucial zone around here at around 1.3600, and we have a very good trend line that the market has expected on the third touch, right? And we all know the third touch rule by now. First touch here, second touch here, third touch here, we're going to be expecting a bullish move, right? A buy setup right here. But again, how long will this buy move? Yeah, how long will this buy last? Will be determined by this structural point at around 1.3600. So will be the once the price breaks this structure, then this guy has no other option but to continue buying. Yeah. So this is the structural point I'm looking at. Currently, we might be in a buy. We are in a buy actually, but again, we are being careful. We want to try to be careful of these zones right here. So I'm targeting here and trying to break even at least. And once price breaks the zone, then I'm sure to go all in on a position. All right. So to Euro USD again on the daily time frame, you notice again we've got a beautiful trend line here, and another structural point around 1.1800. Got a very key level around 1.1800. So the bias is still the same, similar to GBP USD. Once price breaks out of the structure, then we're going to be expecting a bullish move to the upside. But if price retraces down, then we're going to expect this guy to continue tanking to the downside. All right. And next, we're going to be looking at gold. XAU USD. Gold currently, as you can see, has been unapologetically bullish. The best you can hope for now is to just get a very perfect entry so you can continue with the buys. But gold is straight off to the moon, right? As you can see on the daily time frame, the move has been crazy. After this long period of about 3-4 months of ranging, the market's ranged here for about 3 to 4 months, then broke out and aggressively start buying. To this point, we're still buying. So we cannot tell when there might be another range for a period of time, but again, we just need to look for those sweet spots and continue with the buy. So gold is buy all the way. All right. See you guys in the next one.